So I think we're going to get started here. Welcome everybody for this morning's presentation. My name is Susan Acey. I'm the founder of A.P.EX American Professional Exchange PROaupair. And I have with me today Tim Johnson. He is a CPA and tax partner at JLK Rosenberg LLP in Irvine, California. Hello.
Hi everyone, this is Tim.
So today we have set aside about an hour. We think it's maybe 20, 25 minutes presentation, and we will talk about what are the tax implications for a J-1 exchange visitor holder, particular those who are on the J-1 au pair category. So thank you so much for joining us this morning. We have lots of people here on the call. We would like to get started right away. Just some housekeeping issues. I will keep everybody muted. So if you have any questions, there's the question box, and you can type in your questions in the box, and we will try to address it, or to unmute you specifically, and then you can ask your question. We will see how it goes. So from that on, I would like to hand it over to Tim to guide you through the discussion this morning.
All right, thank you, Susan. Like Susan said, my name is Tim Johnson. I'm one of the tax partners here at JLK Rosenberger. I am a CPA and deal specifically with tax on a daily basis. But I wanted to, one of the things this time of year when we're so busy with taxes, that I like to focus on are my kids. And sorry for the bad picture and in word, but us accountants are not the best marketing type people. But this is my family. This is me right here, and then this is my oldest, Trevor. He is going to be 7 in a couple months here, so he's 6 years old right now. This is Jordan, my middle girl, and she is 5. And the little one over here, you can barely see her. This is Taylor. In this picture, she was 2.5 or so. She just turned 3 last week, and this is skiing up at Mammoth Mountain. One of the things that we like to do as a family. And this is my wonderful wife, Anne, who keeps us all in line. So that's me, which is, skiing for a tax person is a rough, sometimes a rough thing because we don't get to do it as much as we like, but I'm glad to be here today. So I want to go through a couple of things that I hope to accomplish first today. And I live this stuff daily, but I understand that not everyone else does, and especially in your position as being a non-resident to the United States, that I hope to be able to give you a basic familiarization of your tax responsibilities while you're here in the U.S.
Tim, I think it would be helpful if you would speak a little slower.
Okay.
Because we are all, not native speakers, and
Okay.
It would be great. It's a very unfamiliar topic, so if we can go through a little slower and maybe look at specific topics and give us a break, and so people can ask questions. That would be helpful.
Okay, sounds good. And I do tend to talk fast, and so I apologize, but I'll do my best to enunciate and as well as to slow my tone down, so everyone can get the most out of this, out of the time that we have together. So I'm hoping to be able to give just some basics on taxes. Our expectation is not that you're going to come out of this program knowing all about U.S. taxes, but hopefully at least to give you some comfort in that you have some tools at your disposal to be able to take care of your U.S. tax responsibilities. Furthering that is also to help you understand what dollar amount you might be looking at in terms of taxes, and what the actual mechanism for filing taxes are here in the U.S., as well as some tips and tricks for your taxes and like I said earlier, provide you some resources. Because we know that not everyone is going to retain 100% of what of what we're going to talk about, and so the resources hopefully will be very useful for you. So moving right along, so in basic terms, as a J-1 visa visitor to the United States, you're going to be considered what is called a non-resident alien. So meaning that you're not a citizen of the United States, you're not a resident of the United States, you're truly a visitor in the United States, and so a non-resident. And for income tax purposes, that's called a non-resident alien. The that means that your income that you earn in the U.S. is going to be subject to tax. So that weekly stipend that you receive from your host family is taxable. And some people may think that this is that since you are a visitor and that you're a non-resident, that that is not taxable, but that's actually not the case here. And we will go over some of the thresholds, because if you make a very small amount, you may not have to file. But if you're here for an extended period of time, and so your stipend is going to be above that filing threshold, you will have a filing responsibility, and most likely need to write a check to the United States, and we want to make sure that everyone is prepared for that. In general, your income from outside of the United States will not be subject to tax. So since you're a non-resident of the United States, if you earn income back in your home country, you're not going to have to pay U.S. tax on that. Doesn't mean that maybe in your home country you may have to also report. I'm not familiar with how that works back in your home country, but in most cases, countries have mechanisms to be able to eliminate a double taxation of the same income. Whereas me as a U.S. citizen, I have to pay tax no matter where I earn it. So you're only, as a non-resident alien visitor, you're only going to pay tax on your income earned here in the U.S.
So Tim, just to make sure, let's say if one of our professional au pair entered the US in June 2012, and she has been working the first 6 months of 2012, let's say in Germany, and made, let's say, $1,000 a month in Germany, that would be $6,000 equivalent income from Germany. Those $6,000 are not subject to U.S. taxes. Is that correct?
That's correct. Okay. So only the amount of income that, so in your example, the June and beyond, the money that was earned here in the U.S., that would be subject to U.S. tax. But the income earned, even if it's in the same calendar year, the income that is earned outside of the U.S. prior to coming here would not be subject to U.S. tax.
Okay.
Okay. Now I understand that for the most part, I think most of the professional au pairs are coming straight over from their home country to the U.S., and so they would be not here previously working. But there is a little twist. If you were previously here as a student, maybe a teacher, a trainer, on some other type of visa, and you've been here for an extended period of time, as opposed to coming from your home country to the United States on your J-1 visa, that you may have some other reporting requirements, and that we're not specifically going to go into those details during this presentation, but just know that if you have been here for an extended period of time, that you may have other responsibilities, and specifically that's going to be that instead of being a non-resident alien, you would most likely be considered to be a resident of the U.S. because of the amount of time that you have spent here in the United States.
So I think 95% of our program participants come here to the US for the first time. So I think everything we cover today will be, suitable for the maturity of our program participants. And if there someone who has questions regarding previous days, I think there would be some additional information needed from a specific tax advisor who can advise you in your specific situation. But
That's correct.
the
Yeah.
majority of our program participants will be considered a non-resident alien for income tax purpose, and that's what we're going to talk about today in this webinar.
Perfect. So if you're that one person out there who's maybe been here an extended period of time, seek some additional help. But so for and the another confusing part is that I think when you look at the information on the internet, which we all love to do, is that there some people think that au pairs are considered to be students here in the U.S., which is not the case, and so that it's that non-resident alien tax classification that we are focusing on, which means that your U.S. earned income is going to be subject to U.S. tax. Some important dates that we have to keep in mind, and especially for us tax people that live taxes daily, our due dates are very, very important to us, and it's very important to the government also. One day late is unfortunately late, so these dates are very important. So understand that our tax day, you might hear that term utilized even in general conversation, is April 15th of each year. Occasionally, they might be pushed to April 16th or 17th due to a weekend or a national holiday. But this year it's April 15th. And so that is a date that everyone needs to stick in the back of their mind. And as we approach it, should be coming to the front of their mind. Um, and so our 2012 taxes, so here in the US, we file our taxes and report our income on a calendar basis. So our 2012 calendar year taxes are due April 15th of 2013, here in just about a month and a half. Now, even though the due date is April 15th, you can ask for an extension, but it's not automatic. You have to file a form with the IRS. It's a very easy form to file. It mainly has your name, address, tax ID number, and an estimate of what you think you owe the government. And then you mail that voucher. It's just a little small voucher, less than a half a page, to the IRS, and then they automatically are going to grant you an extension. And you have until October 15th. That date is not on the slide, but that's the extended due date here in the U.S. for our 2012 taxes. And the same is true for 2013. These due dates stay the same every year, with the exception of weekends.
So what would be a scenario where one of our program participants would file for an extension? I mean, to me, it seems like it's yet another form to file. Shouldn't we just get the form done in the first place and be done with it?
Absolutely. The goal should be for you to file timely. Should be to file by April 15th. Get it out of the way. You don't have to deal with it again. And the reason why someone might in your program may need to ask for an extension would be in a situation to where maybe they don't know how much stipend they had earned, and they haven't taken the time to figure it out. Maybe this is the first time that they've really considered that I need to file taxes for 2012, and so they haven't they're not able to in the next month and a half, which is a fair amount of time. So we should still be able to all figure out how much stipend income you received over the next 5-6 weeks. But if you get in a situation to where you for some reason you're not able to determine that, you are able to file for an extension. But you should not it should not be anyone's goal for a professional au pair to to file an extension. That's not something that is probably beneficial for anyone to do. There's no upside to doing it. It's better than not filing at all, but it's not uh, it's not necessarily a good thing. Um, so, so, because the other thing that we have to remember is that an extension is only an extension to file the return. It's not an extension to pay the tax. So by April 15th, we have to have our tax paid in, or we have to pay a penalty to the government for paying our taxes late. And so when we're filing that extension, if we don't pay the government what we owe them, they're going to charge us a penalty for that. So again, this is another reason why we should all do our best to file by April 15th. That way we don't have to, figure out what tax we might owe, mail in the extension, mail in our check for the tax that we think we owe, and then have to do the tax return after the fact by October 15th.
So let me just ask you a question. If, let's say, somebody wants to ask for an extension until October, that still means they have to send in a check on the estimate taxes they have to pay.
That's right. So an extension is only an extension to file the return, not an extension to pay the tax.
Okay, so there is not really a big advantage in our scenarios, because
right, you have to almost essentially file figure it out prepare anyway. The tax return to know how much tax you're going to owe,
and then you have to touch it twice.
Yeah, so you might as well file the entire tax return.
Okay. And we're gonna later on, a little bit earlier, you showed me it's a very simple tax return file. It's a one page, or I think it's 2 pages.
It's 2 pages,
and it's very simple to file. So later on, we're gonna show the form specifically, and I think it's really simple. It's not requiring much information. It's just very important for everybody to understand what the implications are of, maybe passing April 15th. So penalties means that there's an extra fee the government asks you to pay because you have been late.
That's correct. And the other thing, I'd mentioned that we do file on a calendar year basis here in the United States, which is not always the case around the world. But if you have, let's say that you've only been here, or you will only be here for 1 year, meaning 12 months, but it's over 2 calendar years, you're going to have to file 2 tax returns. So if you came in the middle of 2012 and you're going to be here through the middle of 2013, you will most likely be required to file both 2012 and 2013 taxes. So even though you're only here for 12 months, you have to file 2 tax returns because your income falls across 2 calendar years. And you have to file those tax returns even if you are no longer here in the United States. So for example, if you work through middle of 2013, so 2000 and let's say June, July of 2013, and then you go back to your home country, your 2013 taxes will still be due to the United States government by April 15th of the following year, of April 15th of 2014, even though you're no longer in the United States. So just because you're not here anymore, if you had income in the United States, you still need to file the tax returns.
So, Tim, what are the implications? What could happen if someone returns to their home country, did not file their tax returns?
Yeah. Well, what would happen is mainly going to be some visa problems. The U.S. government doesn't have to allow a visa to someone to come into the United States, and so there could, if they personally get flagged by the government when you try to come back to the United States through customs, there could be a flag put on you, and you could have some issues. As well as if you apply for a future visa to come to the United States, there could be some implications of that also, which as your participants probably know better than I do, is that those are not things that we like to deal with.
That's
So,
true. So, and I think with the increased electronic communication between every government entity, the communication between the IRS, which is basically the tax part of the government, and immigration increases. So the likelihood of something like this showing up in one's record is much higher.
that's correct.
And that's why we took the time today to invite Tim and make sure we're all getting educated on the topic of taxes, because I wasn't very familiar of all the details either. So thank you, Tim, again.
Well, there's a taxes are a complicated type thing, and it's something that is very important, as we all know, to run our society. But it is complicated, and probably even more so. It's sometimes just scary if you don't know what you know how to do it, and you don't have the information available. So this is great that Susan has reached out to me to help the participants. Um, the big question is, well, how much am I going to owe in tax? And it's going to vary by depending on how much your stipend income is. And so what I have done is I've if you're saving between 10 to 15% of your stipend, then you're probably going to be okay. Okay, so the most safe thing to do is save that 15%, and then you'll probably have a little extra in your savings account at the end of the year, to where it's a good thing to save money anyway. And if you're at the 10%, you're still probably going to be okay, um, but you may not have as much of it in your savings account at the end of the year, after you file and pay your taxes. So what I have done is indicated 4 different stipend levels, and the approximate amount of tax that would be owed on these. Now, if you made $6,000 in stipend, don't put $225 of tax on your tax return, because that's not the exact dollar amount. That's just an estimate. Um, but if you have $3,000 or lower or less, you will not actually have to pay any U.S. tax, and you actually don't even have to file a tax return. So this would be the case, especially if you came to the U.S. Towards the end of the year, or if you left the U.S. towards the beginning of the year, and your weekly stipend does not get above the true number is 3,800 of income, then you don't have a filing requirement, and you will pay zero tax. So that's what we call an exemption amount. So everyone can earn $3,800 of tax for 2012 and earn 3,800 of income and pay zero tax.
Do they have to file?
So that you do not have to file if you're under 3,800.
So if you make 3,800, then you have to file.
If you make $3,801, you have to file.
Okay.
Yeah. So
Good.
if you're at that dollar amount or lower, then you do not need to file. Recommendation from me is that if you're close to that, you should file, just to let the government know that you're taking your responsibilities seriously, and that you are letting them know that I don't think I owe any tax. So you would show the exact amount of stipend income you receive. You would indicate on your tax return that you have zero tax, and then it lets the government, it gives them an opportunity to be able to say, yes, Susan is doing the right thing. She is reporting her income, even though she doesn't have to. And it gives the government an opportunity to be able to say, we think you have other income that you haven't reported, and lets that communication happen, as opposed to if nothing is filed, then um, you know, the government doesn't know what happened, and then it lets them determine anything that is out there in terms of income.
Yeah.
But if you are close to that 3,800, I would still recommend filing. but there's not a requirement to file if you earn $3,800 or less.
Mhm.
Once you go above that, then there is a requirement. So at the $6,000 of stipend income, and remember this is per calendar year, not every 12 months, but per calendar year. So $6,000 of stipend would be $225 of tax. $10,000 of stipend income would be $625 of tax, and 13,000 in stipend would be about $1,000 of tax. And I didn't go any higher because I think that that's appropriate for this group. But again, I want to stress that it's on calendar year basis, not on a 12-month basis. So hopefully that, just gives you an idea, even without filing your tax returns, about, if you haven't been saving throughout the year, that you still have a few weeks to be able to get some money available to be able to pay in April.
So we have a couple of questions here.
Okay.
Maria is asking, I arrived in October 2012, so I have to pay for both years, 2012 and 2013. That's correct. And so you have to pay 2013 taxes in April 2014 when I'm back in Germany. Did I understand that right?
Yes. So Maria, you would file your 2012 taxes here in the next few weeks. Okay, assuming that you are over 3,800, and that you may not be based upon your stipend amount. I think you would actually probably be under the $3,800 filing requirement, so you would not have to file or pay taxes for 2012, but you likely would it for 2013, because I was presumed that you would be here for probably 9-10 months or so, and so your stipend would be above the 3,800. And then when you're back in Germany in this time next year, that's when you should be filing your U.S. taxes, which is why it'll be important for you to keep some of the resources that we'll go over at the end of the presentation or towards later in the presentation, to where you can get those the tax forms while you're in Germany, and complete those and mail them to the government.
Okay, and then we had another question from Claudia. What if someone arrives late December 2012 and as a result only receives 2 weeks worth of stipend? Is there a dollar limit below one would need to file?
Yeah, so the same would apply for you, Claudia, in that you would, since you were only here for a few weeks during 2012, you would not be above that $3,800 of income or stipend received for 2012, and so you would not need to file a 2012 tax return, but you would need to prepare and file a 2013 tax return. So hopefully that makes sense. And we have another question from Rebecca about unpaid vacation, which if you don't get paid it, then you don't have to pay tax on it. So I believe that everyone gets a week a year, but Susan, do they get paid for that week that they take off, or do they or do they not get paid? I mean, her question says unpaid vacation, but
if you take unpaid vacation in agreement with your family, then you didn't receive money that week. Right. So basically, at the end of the webinar, we're going to have a template for you. You can use working with your family to determine exactly how much money you received in 2012, and then also to keep track on how much money you're going to make in 2013. And then on the bottom line, you take all the payments you received together, and this is the amount of money you received for the full year, and then you pay taxes of that.
Yeah, so if you don't, big picture, you're only going to pay taxes on the income that you received. So if they give you unpaid time off, then you would not have to pay tax on that because you did not receive any payment. So you're only going to pay tax on the payments that you've received. So hopefully that makes sense.